Hello everyone. IPOs have been the talk of the town lately, but today we'll be discussing about an upcoming NFO. We'll be taking a look at IDFC Nifty 100 Index Fund. To take this ahead with us, we have Mr. Gaurab Parija, who is the head of sales and marketing at IDFC. Welcome to the show, Gaurab.
Thank you, Piyush, and thanks Upstox for having me again on the show.
Pleasure to have you, Gaurab. So, let's get started. My first question to you is, what are the advantages and benefits of investing in an index fund?
So like Piyush, you asked the question that what are the advantages of investing in an index fund? Like every other fund, the index fund is a fund which replicates the underlying index. Now, in this instance, the fund we are launching is going to represent the Nifty 100 index. The multiple advantages of an index fund are, firstly, it's a fund which helps you diversify across sectors and stocks. Secondly, if you have to do the same on your own, you would be spending a lot of money. For example, if you have to replicate the Nifty 100, you would need approximately a crore. In this fund, you can do it for as low as 5,000 on a lump sum or rupees 100 in a SIP. Given that an index fund needs no fund management interaction, the expenses of an index fund typically tend to be very low. These are some of the broad advantages of an index fund, especially the Nifty Index 100 index fund, which we are launching.
To better understand this, can you please elaborate on how the Nifty 100 index fund will be allocated in terms of companies as per market capitalization?
The fund will replicate the Nifty 100 index by allocating it to companies in the index, like I mentioned, in their respective weightages in the index. In addition, any change in companies or their weightages in the index will be realigned automatically, and the fund will also do the same. Now, the Nifty 100 index consists of the 100 largest companies in India by market capitalization, hence reflecting overall market conditions in the economy at the prevailing time. As we speak, the index is well diversified across major sectors like financial services, IT, oil and gas, consumer goods. And from a market capitalization perspective, this index helps the investor participate in close to 70% of the overall market capitalization in India.
So you've emphasized that a beginner investor needs relative stability and that large caps have given more predictable returns versus say a mid cap and small caps. Can you please elaborate more on this point?
Piyush, as we've been discussing, this is the Nifty 100 index, which effectively comprises the top 100 well-established and known businesses. The companies are pretty much the market leaders in the sectors with stable business. Given the segment we are catering to, these stocks tend to be less volatile. Hence, the underlying index is less volatile compared to other segments, mid cap and small cap, without giving away too much of returns. Now, the measure of volatility, as many of your followers would know, is what is done by standard deviation. And hence, if you look at the standard deviation of the Nifty 100 TRI, it scores at a very good 5.94% compared to the Nifty Mid Cap 100 at 10.79 and the Nifty Small Cap 100 at 12.44. And these are the reasons why this index compared to the other indices and segments is far less volatile. And hence, for a beginner who is taking baby steps into the world of equity, we think this is a great way to get introduced into the world of equities.
So Gaurab, when it comes to diversification, which major sectors will the fund track? Simply put, your stock selection parameters.
Thanks, Piyush. Like I said, Piyush, IDFC Asset Management will not choose the underlying stocks. The stocks will be as per what the Nifty 100 index is. Currently, the sector and stock weight allocation in the sector is outweight or is dominant with financial services, consumer goods, IT, energy, and commodities. These are the top 5 sectors of the Nifty 100 index.
So thanks, Gaurab. Coming to an important aspect of the fund, how is this fund different from say other funds in the market? Could you please help us understand your key differentiator?
Firstly, Piyush, I'll be very honest in stating that the Nifty 100 index fund launched by IDFC AMC is not different from many other index funds in the market. We have one more index fund, albeit playing the Nifty 100 index. I think where we've tried to put a proposition which is slightly different from the market is that we believe the Nifty 100 index fund is a fund which caters to all the types of investor segments out there, be it a beginner, be it an informed investor, be it an experienced investor, or even a person who is retired or just about to retire. We think the Nifty 100 index fund has all the elements for all of these 4 segments of investors to invest for.
This is an interesting question. So in the wake of what is perceived to be the next 12 months, wherein, we might see rising interest rates, is it prudent for somebody to seek mutual fund alternative to fixed deposits?
Piyush, thanks once again for a very interesting question. While we are digressing from the topic, I think we've been known in the market for fixed income. So let me reiterate the 3 things in the fixed income market we've been talking for quite some time. Firstly, we think the current short-term rates are at exigency levels and clearly are not sustainable. To an extent, the market is already factoring in some amount of rate increase over the next 6 to 12 months. Secondly, despite the expected increase of interest rates, we believe the interest rates will not touch the rates at which we were pre-pandemic or prior to the COVID era began. And lastly, we believe that bond supplies, especially at the longer to very long end, will continue given the amount of maturity and fiscal deficit and borrowings expected. Now, given all of this, we continue to reiterate that for an investor, a barbelling strategy, which effectively means putting some money in very, very short-term funds and some proportion of the money in 4 to 6 year government security bond market, is a strategy which we've been advocating. And that we believe will continue to be the best strategy to be followed in these times.
So in fact, that kind of, segues me into asking you something on the similar lines. Which kind of investor is this fund best suitable for? And, what is the investment horizon an investor should keep in mind when investing in this NFO?
Thanks, Piyush. Now, like I just stated some time back, when we were putting together the proposition and the deck for the Nifty 100 index, we realized that given the data points the Nifty 100 was throwing, we think this fund is suited for pretty much all types of investor segments. We've actually broken it down to 4 investor segments, which pretty much covers the entire investor base, which is the beginner as an investor who is taking baby steps into the world of equity, an informed investor who pretty much knows what's going in the markets, an experienced investor in equity markets. For him or her, we think the Nifty 100 will add a very good complement in the passive sleeve. And last but not the least, we also found it merit-worthy for a retiree or a retired investor to have in his portfolio. So it pretty much covers the entire expanse of investor and their various needs.
Okay. Finally, to sum this up, I'd like to ask something which is, very common, but, people would like to know that is, what is the total asset under management you're looking for this fund?
Piyush, again, a tough question to be asking a sales guy, but ye dil mange more is what we always believe in. We believe that we should be looking at an initial corpus of rupees 50 crore and above.
So that's it from our side, Gaurab. Thank you so much for joining and taking out your time. It was such a pleasure to have you. We wish you all the best for your upcoming NFO.
Thank you, Piyush, and thank Upstox again for having IDFC AMC on the show.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.